Hello everyone and welcome back to my gap trading series. We have another perfect gap setup. Definitely keep watching these videos over and over again because if you want to get into day trading, you definitely need a framework. You need to see these patterns over and over again and know how to execute them so you can become a profitable trader. So before we get into the chart, let's take a look at our fundamentals. These are our guidelines. We look for stocks that have institutional participation because they're there to buy the dips. They're there at certain numbers, buying and selling, which makes the strategy predictable. The deal is the closing or the opening or closing price of the gap of that white space, and you're also going to see this white space that I'm talking about when we look at the chart. If there are patterns that develop, we also trade those. If there are no gaps, sometimes we demonstrate what those patterns look like. But we do focus on the deal and the gap trading. That is the primary strategy, and we don't. And the risk management is we look to risk 0.5 to 1.5% at most. That's how we stay in the game. That's how we stay profitable. So let's take a look at the chart, shall we? So this is Apple. And on August 5th, we're looking at a 5-minute chart, 15-minute chart. Let's take a look here. Yeah, this 15-minute chart. We closed at $1.47. And on August 6th, we opened at $1.4640. Now, I did mention that white space. This is the white space that I'm talking about. And maybe here, you can also see it here. So these are gaps, right? And what tends to happen is we tend to fill those gaps during the trading day. And we use the gaps as, I guess, a guideline, a post, something to trade off of. So what normally, and you'll see this in all my videos, is that we take the high of that candle, and if it was a gap down, it would be a low, it would just be the opposite, and this is our entry, right? If we gap down and we trade into it, this is where we would initiate a short. And if we start closing candles above here, then we know we're wrong, and we can cut our losses, right? So 1% risk management at 147, you're looking roughly at 148.40. So you have lots of room. You have $1.40 of room, and so you don't have to be nervous if it spikes through here and it starts trading. Sometimes that does that, and then it falls through. You know where you're wrong, and you just get out. So you have your first entry here, right here at 146.84. I typically round it off. I would do 147. That's what I would normally do as per the fundamentals, which is part of our Patreon. And just that reminds me, this is not financial advice. I'm just showing you a strategy that I use on a regular basis to pull profits out of the market. But so this is the entry area, is basically this candle. You can enter here if you want at 146.80-ish, right? Or at 147. So in that zone, you see the price there. You just enter your short. And then if it just keeps on going up and closing above in this area, above this candle, then you're wrong and you just get out. But in this case, we had roughly $1. So 147 to 146 is $1, and $1.25. Not your typical 1% gain, but you did get profits along the way. It even closed at 146, so you did get $1 move here. At minimum, if you held throughout the whole day, and that's your trading strategy. You can see that these lines here are a gap from over here, and you can see that again this was an important number. So as it came down into this line, it bounced back and came back up. There's no previous gap here. Like once it's filled once, the second time over is not a good idea. This is something that we learn in our lessons learned when we do mistakes or we find behaviors that are costing us money. We document it, we do self-analysis, and we know that the second time around it's not that effective. So here's the first time that it came into filling this gap, so we took the trade, and then that was it. So hopefully you learned something. Hopefully you enjoyed this video. Keep watching, instill these good habits, and you will definitely be successful.